Hey, what's up? It's Trader Tim from EminiMind. Today's the 29th of February. Happy Leap Day. It's been a really good week of trading, so I wanted to run through all my trades from the week. So let's just dive right in and not waste any time. We'll just go day by day. So today's Thursday. The first trade that I had today was a 1-minute trade. Essentially the three main strategies that I'm using to day trade the ES. I've got the 1-minute hammers and inverted hammer strategy. I've got the 15-minute opening range breakout, and then the retracement strategy on the 512 tick chart. So first trade today was a short on the 1-minute chart. That was so we had the gap up today, and then that lower high, this inverted hammer right here, is where I shorted underneath. And so we opened up, it ran up a little bit, just for about 5 minutes, and then started going sideways. But at the time, this was kind of a lower high based off of the high put in right after the open. So I shorted below this low of that inverted hammer, the low of the high bar. And then we had this big sideways consolidation. And so I start with my stop 1 tick above that inverted hammer candlestick high. And so it just stayed there because the next candle traded down, but then then from there we just traded sideways. We did not break the low of that second candle. So since we were just kind of basically hovering above and below my entry price and even traded 1 tick away from my stop, I'm just leaving my stop 1 tick above highs until we actually do break lows. And then we did get a nice push down shortly after. Let me get rid of some of these lines here. And we sold off, and I took that one down and then I trailed my stop above this hammer candle because we had a low tick of the day right at the same time, 8:14 Mountain Time, and that was corresponding with the nicey low tick of the day. And this one I actually reversed on, meaning I got out of the short, and that was for 13 points. So from the inverted hammer was a 51.01 in the quarter, 1 tick below, and then 1 tick above the high price of the low bar was a 50.88 in the quarter, so 13 points. And then you essentially just double your order, so I put another order on top of the exit for the stop, and that got me long because that was the low price of the low price of the day and the low nicey tick of the day. And you see how far away we are from. This is a 21 EMA, but if you don't have that on there, you could just have plain old trend line and see they're basically the same. Direction, and the distance away from that 21 EMA and the trend line gives us room to bounce up to that trend line and maybe go a little bit higher. If we were right on top of it, like if the 21 EMA or the trend line was like that, then let's say this decline wasn't as steep, I wouldn't be as inclined to take a long. But since we had room to move, took that long, and then that one we came up and I just trailed. We pulled back by 1 tick here. I trailed the swing low. I didn't want to tighten my stop underneath this inverted hammer because we didn't make it all the way to the 21 EMA yet. We were still, or that down trend line. We still had room to go. So I let this one come up. I put my stop underneath this cluster of lows once we moved up, and then did that again. We moved up here. We pulled back, moved up again, put my stop underneath this low, and then that's where I got taken out over here. Now, you can do it one of two ways as far as when to move your stop. Once the candle, so like you got this hammer here. My stop is still back here at the time. We get this hammer. You can either move your stop underneath that hammer's low. You can do that. Maybe I'll use a arrow instead. You can put your stop underneath that hammer's low when you come in and either break above that hammer's high, so right here, or when you break the swing high, so take out that high. Those are the two things that you would need to happen in order to move your stop up. So as of late, I've been looking at it a little bit more closely and just waiting for the break of the candle's high here to tighten your stop if the context is that we are away from our entry price. So moving the stop up here, this trading that's going on up here is well away from the entry price. If we slide back to the first trade this morning, I want to be more conservative with my stop movement while we are trading near my entry price. So that's kind of the dichotomy between these two trades. I don't want to come in and tighten my stop too aggressively. Like I don't want to use this as my stop placement when we break this low, because we're still trading right about the entry price. So for anyone who's traded the ES more than the day, you've probably experienced tightening your stop too early, getting taken out for break even or plus a tick, and then having the trade run and you're not in it. So that's a super helpful way to kind of look at when should I be aggressive with my stop and when should I be conservative. If we're at the start of the trade, we're still trading around my entry price, you can be conservative. If we've already got some momentum, then you can start to be a little bit more aggressive. So that was the second trade today. And then right at that point, we actually got we're halfway back of the day. Actually, the second trade of the day was we triggered the 15-minute opening range breakout short, but I'll come back to that in just a sec. So the next trade here, when we took out this low of that hammer, we actually traded right at the 50% retracement short of the day, 50.95, and then that, got to get over here, 50.95. That set up a little halfway back short on the 512 tick chart. I took this as a short, and then I ended up getting taken out for scratch. We came down, made the little double bottom here. I moved my stop to this. So this is a perfect example. I'm not to contradict myself on moving the stop too quickly. So what I'll say is the 512 tick chart strategy, in any time I'm using a trail stop in this way, I'm going to trail my stop the same way every time. And so this particular trade took me out for scratch before we got the move down. However, it's important to trade and manage the trade on these types of retracement trades the same way, because if you start being wishy-washy with your entry, sometimes at 50%, sometimes at 60-1/8, sometimes waiting for a candle to break for an entry, and then sometimes you're using a fixed target, sometimes you're using a trail stop, your data set's going to be all screwy, and it's going to be very difficult to tell which trades are working and which are not. So the way I always trail my stop or manage my trade on a 512 tick chart is if we come down and break the swing low or just double bottom, I move my stop to break even and then I trail the next retracement. So trailing the next retracement would look like this. And then we came up and this one retested the 50% a bunch of times. And so regardless of when you start to bring your stop down, this one would have taken you out, and that's okay. And you're looking at the 1 minute chart here. We do have a lot of sideways action, chopping around the entry. With the 50% compared to the 1 minute trades, the really good trades will get reactions and move away quicker. So waiting to move my stop to break even until we break lows or touch lows, in most cases, is giving you enough room between the entry and those lows. This particular setup was a little bit small, and so even if I waited and put my stop above the 60-1/8, it still came up above the 60-1/8. It held the 2-point stop as far as using an initial stop of 2 points. But this is just one of those instances where we chopped around at the 50% and trying to be congruent with the exit and trade management of moving my stop to break even at the low. I know it seems a little bit early from just what we talked about just a couple minutes ago with the 1 minute chart. But you'll see more often than not. Let me see if I can go back. So like here, just taking a little long setup. See how we come down to the 50%, we bounce, we take out the swing high, and then as you come in and start to draw up the next retracement, your stop is at break even, prices up here, pulls back to the next 50%, and then continues upward. So this would be a more common scenario you'd see. We come down, tag up on the 50, and then get the lift off. And then I guess the fourth trade today was the 15-minute opening range breakout. That one set up and got a pretty strong rip initially. Then we got this bear flag and then finished. I put the target on here so you could see it. 50.77 was the plus, got plus 20 points on that one. So that was a lot for today. Let's run back. While we're on the 15-minute chart, I'll just run through those for the remainder of the week here. Yesterday, Wednesday, unfortunately, we had this little tick, one tick below lows, and that got me in the short. And then immediately, 20 minutes later, we broke highs. So I was stopped out on the initial direction for 9 points, fairly small candle. And then I got long, and I took the break to the upside. And then this one, we traded up and then traded back down a little bit and then traded up again. And I actually had to leave in the afternoon. I was going to hang out with my daughter. And so I just put my stop underneath this inverted hammer. I left the 20-point target out there and put my stop underneath the inverted hammer. And then I got taken out for like 6 points of profit on that one. So rather than waiting till the close, I got a little bit more aggressive with my stop earlier. Nothing on Tuesday because we filled the gap in the first 15 minutes, so there was no trade there. And then Monday also got 20 points. We let's see here, 20. 26. Here it is. Okay, that's why it looked funny. This is the low of the candle. We moved below that. We did not fill the gap, and then we basically sold off most of the day, and so that was an easy one to get 20 points on. So pretty good 15 minutes for today, or for this week. Going back to, let's see, retracements wise, well, let's go to yesterday's retracements, and then we'll go to the 1 minutes, and then we'll get wrapped up here. So yesterday was the 28th. And retracements on the morning. The first one was a crossover at 804. And so what that means is that price crossed over the halfway back. And so that was here. The short. This was the full halfway back at the time from the high of the day to the low of the day. We crossed through it, so we broke that short. So I just drew up the little long like that. And then pulled back, traded into the 60-minute a little bit, but after just a couple of minutes, we got liftoff, and then that one I ended up trailing my stop, I believe, from the swing low here to highs. And I get taken out underneath this swing low on the pullback. So same process as I would always use. When we break this high, the swing high, that's when I move my stop to break even. And you can see, break even price is down here. The actual trading price is up here. So you've got a lot of wiggle room. So even though this one, traded a little bit at the entry price for a couple of minutes, it got its lift off, and by that point, when I'm moving my stop to break even, we're pretty far away from that entry price. So that one got a 3-point first target and then another 3-ish points. And then there was a high tick a day shortly after that. That was here, 8:15, and took that short. That one came down, so rolled over, got a first target, and then I started trailing my stop, trailing the next 61.8. And then that's what took me out. It went just a little bit further and then reversed. So 3 points for the first target and then another point on that one. Didn't have anything Monday or Tuesday retracement-wise. We were choppy. There really wasn't much happening. So let's go to The 1 minute chart for the rest of the week, we will do, whoops, time frame. Okay, so yesterday we had 746. That was this here, inverted hammer, 746 short, and that one traded down. We traded down, a little bounce, traded down again, bounced. I put my stop above this swing high when we broke the candle's low, because that was kind of at the 50% retracement as well, short. So I put my stop above there. And then the next one was the bigger, kind of the more main topic of the video as well here. This was the full halfway back of the day, and we traded. It wasn't a perfect hammer, but it was close enough. And so this 1 minute candle closing at the full halfway back of the day, buying one tick above the high, the low bar of that candle. I mean, that's a great approach to sort of combine the 1 minutes and the halfway backs. The 1 minute charts, I'm looking for these hammers and inverted hammers at highs and lows of the day and the halfway back points. And so this one bounced off the 50%. We started running up, and then we didn't get a huge move initially, but we did make it to the negative 23% target, and then pulled back a little bit, and then put my stop underneath this swing low. Once we came up here, we started taking out highs, pulled back, took out the new high, raised my stop up again, raised it up again. The exit I ended up with was 75 and a quarter. Is that right? 85 and a quarter. And that was underneath this right here. I can't see the price with the arrow on for some reason. 86 and a quarter, 85 and a quarter. 84.75. That's what it was. So it was underneath this. No, that's right. It was only a day ago, but jogging my memory here. So let me flip to my notes to confirm. Yes, inverted hammer, big green inverted hammer. Okay, so with this one, we started running up, and this is where we got the stronger run up. And so this inverted hammer here, we're starting to get away from the 21 EMA. So that's where I put my stop, underneath this inverted hammer, and then that's what took me out, right underneath this candle. So that was a nice run up off the halfway back of the day, and you can use, the 50% retracement, getting that confirmation of the 1 minute, and then trailing the swings. Tuesday, just had one retracement, or one 1 minute chart. That was at the top of the hour, 7:57. Here, little inverted hammer. I believe that was at the, just kind of at the halfway back there as well. So good spot for a trade. But this one didn't roll over. We came in and broke the 61.8. So that one stopped me out. And then Monday was kind of a scratch day. The first one was a stop out at 7:54. That was 7:54 short, small candle right here. 7:54. Yeah, this one. At the halfway back, rolled down, bounced, rolled down again. So just a small stop. I moved my stop above this high of the candle, and so it was a small loss. And then the next one was just a small gain to kind of offset his scratch. 818. Took the long here. We came up, and then I put my stop underneath that inverted hammer because we started to look like we were doing a lower high, and we were kind of just at the midpoint of the day. So scratch on Monday, but a couple of bigger days today, yesterday on the 1 minute chart. Retracements had a couple nice ones. or one nice one yesterday on that crossover, and then the 15 minutes, a couple 20 pointers, which was nice. So all in all, a pretty good week so far, and we'll do it again tomorrow, and then next week, and the week after that. So if you have questions, drop them in the comments below. Hope you have a great rest of your day, and I'll talk to you soon.